right? So let's say you see this market, right? So this market, as we said in our previous lesson, is in an uptrend, right? And since this is in an uptrend, from here to here, we can all agree that this is an impulsive move. This is an impulsive move, right? And we are waiting for the pullback. We are in a pullback, but we don't know where this pullback is going to. We don't know where this pullback is going to end. So how do we know? We said, number one, it can end on this zone, which is our optimum trading zones, right? It can also end on this zone, which is another optimum trading zone, right? But then, if it doesn't do that, there is also a probability that is going to reverse on one of the Fibonacci levels. So for the Fibonacci levels, you are going to come to this zone, to this point right here. So, but before we dive into the video, we want to thank fastbull.com for partnering with us and help us create this video. So fastbull.com uses artificial intelligence algorithms to generate trading signals for different instruments that you can see on the market. If you monitor this, you are going to see that you will get signals with the opening price, the closing price, the stop loss, and the take profit. If you don't like AI signals, you can also follow analysts here. You can see there are different people who analyze the market and they post their signals here. The other thing that you get on Fastbull is a lot of videos, which is educational content. You can see there's a trading academy here and there's hundreds of videos here. You can also, there's also Daniel Market Outlook. You can learn how to analyze the market. So make sure you visit fastbull.com using the link in the description below. You come to this tool right here, right? If we click here, you can see Fibonacci, right? And we want to see what is called a Fibonacci retention or a Fibonacci extension. I will use Fibonacci retracement, right? So if we click here and then we go to the upside, okay, we need to start from the upside, right? We click the Fibonacci, we start from the upside, and then we go back down to this point. Now, the Fibonacci, what you need to do is you need to start. So let me show you this so that you won't make a mistake here, guys. You take this tool right here, right? You touch the top of the where you think the pullback is starting, right? Which is this point right here. This is where you start. You click, and as you are clicking, you drag to the downside, to the bottom part of where that impulsive move started, and then we extend it going to the upside. Now we are going to see different levels here. Number one, you are going to see this where you started is 1 and this is 0. Between 1 and 0 we have 0.23 here, we have 0.5, 0.61 and 0.78, and between these zones the market is likely going to come into this, right? Let me do this. Look, between 0.50 to 0.61 is referred to as the golden zone. So most of the pullbacks is going to come into this zone. If it is not this zone, it will either come into this zone. It can come into this zone, but not must in this zone, not most. If it goes all the way down here, it's likely going to be a failed uptrend. But this zone is the only zone that I want you guys to think of. And most of the time, this zone is also going to come closer to your previous level of structure. And if this zone is the same zone as the previous level of structure, you have a high probability trade. Now let me show you one more example of how to draw this tool, how you use it. So you're going to learn more. Guys, after finishing this course, it doesn't mean that is the end of your learning. We'll talk more about this, but I want you to remove the mindset of thinking you can just learn this course and then go start making thousands. I'm laying the foundations here. I'm giving you what I do each and every day. But then there's a lot of things that are going to come up. There's going to be emotions. There's going to be a lot of things that are going to happen. So make sure When you watch this course, you keep learning these things, right? So now let's look into this market and let's identify the trend first, right? We see an impulsive move here. We can all agree this is a pullback. And if the impulsive move breaks this zone, it's an uptrend, which is exactly what happened. Now the market is reacting and is rejecting. So the market is pulling back here. We said the market will either come into this zone or this zone. But what if that is not enough? Let's pull in our Fibonacci. We take the Fibonacci, right? Take the Fibonacci right here. Touch the upper part, the top part of this Fibonacci, and then drag going to the downside until you touch the lower side of where that impulsive move started. So in this case, it's this zone right here. Now, where is the market pulling back into? This golden zone. The zone between 0.5 to 0.61. This is where the market is at right now. This is the golden zone right here. So we are expecting prices to bounce. Maybe that is not enough. What if we can resize the market and see if the golden zone have been an area of value before? So we mark this zone. We mark this zone. Let's look back. Here, look what happened. The market touched here 4 times. And the market was rejected 4 times. So the more these rejections you see, the more confidence you should have, right? Let's delete this. I'm making a mistake with this drawing too. I don't know why. Let's look back and see maybe the market have reacted again here. Look at this. This is the same zone that the market have rejected to. This is the same zone that the market have been reacting to here, right? Maybe that's not enough. Let's look back. My point that I'm trying to make here is to show you that these zones are always going to work, right? So the market even, okay, here again, look, this is like 2 months earlier. The market reacted to this zone, and it will likely react to this zone over and over again, right? So whenever you try to trade, make sure you have these things dialed in. Number one, if the area is strong enough, you are going to see multiple confluences. In this case, we saw what? Fibonacci is on the golden zone. We saw that the market have reacted to this zone multiple times in the past, here again, and now the market is at that same zone. So what do we expect? We expect prices to go to the upside, obviously. So what I do simply in this case is just come up with a buy trade, or I will wait for a confirmation, right? We are going to talk more about this, but what I'm waiting for is a green candle that shows you that the market is now going to the upside. In this case, we have 2 green candles, right? It can be 1 green candle, whatever you want, right? You buy here. You put your stop loss. You can put it below this zone, but then it's all up to you, and you can put your take profit here. You can manage your trades by doing trailing stops and all those things. I will teach you more about those. But then this is a strong area where the market is likely to push to the upside. So as you can see now, the things that you have learned so far can now start giving you profitable trades, undoubtedly, right? Because I'm showing you where the market will likely reverse. All you have to do is be able to read the trend, read these zones, and know exactly where the market is likely to reverse, right? Now, for you to understand this, right, for you to be able to understand how all this works, there's 2 things that I need you to understand. you are going to combine all this. So all these lessons that you are learned. So first of all, we learned about candlestick patterns, right? Well, how do you know the anatomy of a candlestick? Number two, how to read the trend. And in this lesson, how to read optimum trading zones, right? Now, the next thing that we are going to do is we are going to talk about candlestick patterns. And then after that, we talk about chart patterns. And then we combine all these things and we are going to create strategies. In this course, we are going to come up with 3 strategies that are back-tested that you are going to start using right now. We are going to backtest those strategies together. We are going to come up with the results. We are going to have all those things dialed into your head. So now let's move on into the next lesson and let's talk about the most common candlestick patterns. And then after that, we can combine these candlesticks from knowing, okay, this is an uptrend, this is an optimum trading zones, but then you can use also candlesticks to be able to place high probability trades on these high optimum trading zones. So this is going to be a very good lessons for you. For now, thank you for watching up to now. Go ahead into the market. I want you to go ahead and draw Fibonacci tools and draw these candles, these optimum trading zones, and go back with them and see if the Fibonacci and the optimum trading zones are always lining up, and see if they are not lining up, what are the other factors that might have caused this to not happen. So let's move on into the next lesson and let's talk about the most common candlestick patterns that you ever find in the market.